Want to invest like Warren Buffett and Charlie Munger? In this video, I will be breaking down the top 3 investment types you need to understand right now if you want to grow your wealth the smart way. These aren't get-rich-quick schemes. They're the foundations of building real, lasting wealth. Buffett and Munger have spent decades studying businesses, markets, and human behavior. Their secret? Discipline, patience, and knowing where to put your money. You don't need a Wall Street degree or a crystal ball. You just need to understand the types of investments that work over the long term. Today, I'll explain 3 investment types they always emphasize and how you can start using them in your own life. Investment type 1, stocks in high-quality businesses. First, let's talk about stocks in high-quality businesses. Buffett often says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And Munger will add, spend each day trying to be a little wiser than you were when you woke up. Discharge your duties faithfully and well. Step by step you get ahead, but not necessarily in fast spurts. So what does that mean for investing? It means you're not chasing hype, you're chasing quality. You want businesses with durable competitive advantages, a moat around their profits that keeps competitors at bay. These are companies with consistent earnings, trustworthy management, and products or services people need no matter what. Think Coca-Cola, Apple, or Johnson & Johnson. Buffett doesn't buy just because a stock is trending. He buys because the business itself is solid and has staying power. Why is this so effective? Because owning great businesses allows your money to grow through compounding. The market might have its ups and downs, but the underlying value of a strong business continues to build. Munger once said, "The big money is not in the buying or selling, but in the waiting." Patience is key. You're not looking for overnight wins. You're looking for decades of steady growth. Another point Buffett emphasizes is understanding the business you invest in. Don't just throw money at a company because it's popular. Ask yourself, do I understand how this business makes money? Does it have pricing power? Can it survive recessions? This understanding is what separates disciplined investors from gamblers. Finally, remember that investing in great businesses is about time in the market, not timing the market. You don't need perfect predictions. You need to find high-quality businesses, buy them at reasonable prices, and give them years, sometimes decades, to grow. That's how Buffett built his fortune. That's how Munger built his wisdom. Quality, patience, and understanding are your allies here. Investment type 2, bonds and fixed income. Second, let's talk about bonds and fixed income investments. Now, Buffett is famous for loving equities, but he never underestimates the value of safety. Bonds are boring, yes, but they act as your safety net. They stabilize your portfolio when markets get turbulent. Munger once said, "All intelligent investing is value investing." You look at the value of the business and you decide whether to buy it. You don't speculate. Bonds may not give you exciting returns, but they protect your wealth when speculation goes wrong. Imagine the market crashes tomorrow. Your stocks could tumble, but your bonds or cash equivalents hold steady. That breathing room is crucial. It lets you wait calmly and pounce on opportunities others panic about. Buffett keeps cash and short-term government bonds ready at all times. This is why he can invest billions when others are selling in fear. Bonds and safe assets give you flexibility, the freedom to act while others are forced to react. They're the quiet heroes of a portfolio. Also, think of bonds as insurance for your investing career. You may not get rich quickly from them, but they prevent catastrophic losses. In the words of Buffett, rule number 1, never lose money. Rule number 2, never forget rule number 1. Bonds may be slow, but they help you follow these rules. So don't dismiss bonds as boring. They're part of a disciplined investment strategy. They protect you, give you options, and allow you to stay in the game longer. Safety isn't glamorous, but it's what allows you to play the long-term game successfully. That's how Buffett and Munger think. Excitement is for amateurs. Safety and opportunity are for professionals. Investment type 3, yourself. The third, and perhaps the most powerful, type of investment is yourself. Charlie Munger says, The best thing a human being can do is to help another human being know more. More practically, he emphasizes that investing in your own knowledge and skills has the highest return of all. Unlike stocks or bonds, the value of what you learn cannot decrease. Every new skill, every book you read, every hour spent understanding business, markets, or even yourself compounds over time. Buffett says, the more you learn, the more you earn. It's not just about money. It's about your ability to make better decisions, spot opportunities others miss, and create value in every area of life. Think about it like this. If you invest in yourself for 10 years, you could develop skills that multiply your earning power and investing ability exponentially. Stocks may compound your money, but your knowledge compounds your life. Every investment in learning builds your moat. Munger also warns against laziness in this area. He calls it a failure to self-improve. Time spent learning is never wasted. It can turn average decisions into brilliant ones and mediocre opportunities into fortunes. So, while you invest in businesses and bonds, never neglect investing in yourself. Take courses, read books, practice skills, and understand what drives businesses and markets. This is how Munger became brilliant and Buffett became Buffett. They didn't just invest in stocks, they invested in their ability to see value and act wisely. That's your superpower as an investor, knowledge that compounds faster than money. So there you have it. The three investment types that Warren Buffett and Charlie Munger believe every intelligent investor should understand. First, stocks and high-quality businesses, because time is the friend of a wonderful company and the enemy of a mediocre one. Second, bonds and fixed income investments, because protecting your capital gives you the courage to stay in the game when others are running scared. And third, investing in yourself, because knowledge and discipline compound faster than any stock ever could. Remember, smart investing isn't about luck or timing. It's about patience, understanding, and consistency. As Munger says, take a simple idea and take it seriously. If this video gave you clarity or inspired you to think long-term, make sure to like, share, and subscribe to the channel. It helps the message reach more people who want to learn how to build wealth the right way. Drop a comment below and tell me which of these three investments you're focusing on right now. I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next one, where we keep learning from the timeless wisdom of Buffett, Munger, and other great minds in investing.